don't have to be there to catch the whole move in the market. Most traders want to catch this whole move here. They want to be able to catch from the bottom to the top. And sometimes it's going to work, but most of the time you have a lot of losing trades that way. While if you just focus on these slightly smaller targets, you can make a lot of money. You can kind of take these trades, have a decent stop loss, have a higher win rate, therefore higher return, only because you don't do the same thing that other people do in the market. So the thing about trading is you can be really good on entries, but if your trade management is wrong, you will lose money. Today I thought I would dedicate a whole video about trade management and how to manage your trades better, how to hold them, when is the right time to hold, when is the right time to not hold and take profit faster. We'll dive into this. I'll share the common mistake people make with trade management. Then we'll dive into principles you can take into account to manage your trades better. And at the end, I'll share with you my techniques, things I look at in the market, on the charts, how I manage my trades myself. So let's dive right in. Okay, first I want to talk about a few mistakes people make when it comes to trade management. And before you go ahead, don't skip to the next parts. I know it's tempting to look at the methods and the techniques right away, but you need to understand the mistakes first before we can dive into the techniques to fix them. The biggest mistake people make when it comes to risk management is taking profits too early in a trending condition. Price is going fast in direction, they feel afraid they'll just miss out on the move, or they feel afraid price will just reverse and take them out of their stop loss. So they close the trade faster in the trend. If you do that, sure, you've got your profit, but you're missing out on the whole other move you could have gotten if you had that better risk management on your trades. The second biggest mistake people make is moving their stop loss too fast. And that can go both ways. Either you move your stop loss to break even really quick because you don't want to miss out on the profits you've got so far. Price taps you out because you move your stop loss too fast. Or the other way is you move your stop loss backward. Price goes against you, close to your stop loss, you move it back, give it some more room. Price goes against you, put it back more, give it some more room. You see how that doesn't go well because then you just end up with a big loss. Or a loss you just don't want to take because you've kind of let it run too far against you. Again, not a good way to do things. There are times where we can move our stop loss and it makes sense to do it, especially when we have profits. We want to lock in the profits, but we got to do it logically. And I'll share exactly how that works out a little bit later in the video. Don't worry, we'll get to that. Third big mistake people make here is they tend to increase the risk. Again, that goes two ways. Either you increase the risk by taking trades on correlated assets or correlated pairs in Forex. So you got to trade on Euro USD, then you add a trade on Euro CAD. Like those are two trades that are very correlated. If one loses, chances are the other one will also lose because they have the same base pair. The same could go if you take a trade on the S&P and the Dow Jones at the same time. These are two fairly correlated indices and they will move at the same time mostly. If you do this, you're just adding more risk to your portfolio and just kind of doubling your loss. You could double your profit, but you most likely will double your loss because you've got trades that could just increase your drawdown that way. Speaking of drawdown, the second way people add too much risk is when they have a drawdown. They want to go back to break even, therefore they risk a bit more to just get that account back to $0 like break even level. And because of risking more, they end up being in an even worse drawdown. Or they even go and take more trades or learn different strategies that they can use right now to get out of the drawdown. And because they have these other strategies they didn't really test, they don't really know how they work, they increase and make the risk worse on that account. Now that we've got these mistakes here out of the way, let me know in the comment section below which other mistake you make when it comes to risk management, which other pattern you see in your own trading. I did a post a while back on YouTube asking people for what kind of mistakes they make. Got a lot of comments on that one. But I want to know, in your case, what are some of the mistakes you make? And I can do videos on those in the future, cover them more in detail, show you examples in the chart, and help you overcome these mistakes in the future. Okay, now let's talk about how to manage your trades. We'll go to the techniques, but before we get there, just one quick thing. The way you manage your trades should only be based on data and probabilities. We don't manage based on how we feel. We don't manage based on how the market looks today. Of course, if you've got data on this, if we know when the market is trending, we should manage this a certain way. When we know the market is in this condition, we should manage a different way. We got to have data to be able to determine this. We got to have probabilities we can follow and rely on. We don't just manage based on how we feel or based on how the market looks or based on what we think will happen. We got to manage our trades only based on the testing we've done or on the data we've gathered live from our live trading results. These are things that help us to make decisions. And we got to have this data first to be able to know how to manage our trades better. That is very important. Most people will just go in the market. They will look at YouTube videos like this one, find out how to manage their trades, but it doesn't tell them if it's the best way for them to do it. Maybe they have a whole different way to manage their trades that could be better, or they shouldn't use a technique because it hurts their profit. How would they know? Well, they gotta have data. They gotta have some backtesting that shows that this is the best way to do it, and they gotta have live feedback from the market, live probabilities, the returns, the P&L, the journals show that managing the trades a certain way is the best way for them to do it. But I honestly don't want to bore you here too much. We got to go on the charts. I'll show you how I manage my trades, some things I do, and some techniques I've had to make the drawdowns less and increase my profits whenever I can. Okay, now this is something I've kind of worked on over the past few years more than I used to. And you might not be in agreement with this, and I'm totally fine with it because it works for me, might not work for you the same. But I like to use what I call counterintuitive profit levels or profit targets. What I mean by this is most people go on YouTube or they go with these like trading indicators, these gurus, and they learn what they say, and all of them say, oh, you gotta have at least a 2-to-1 target. 2-to-1 reward to risk, that's what you gotta aim for. Right? So what happens here is most people have 2-to-1 targets, and sometimes it's gonna work, but a lot of the time it's not gonna work well in the market. You can see on a move like this, a 2-to-1 would work, but if you got a slightly worse entry, that trade might not even work out because we just at the bottom here at a wick, then we had a wick, then reverse right against our trade in that case. And we'd be stopped out here at break even. In other cases, that 2-to-1 here just won't work out. See how we're so close here to the wick of the bottom of our take profit here, of our trade at 2-to-1. And if you got a slightly worse entry, like a little bit worse, or if you got like a little bit more spread at the wick, we just won't be triggered on the take profit. We'll lose our whole trade, price will go back against us, break even, or a loss. Just doesn't work too well in that case. So what I do is I use what I call these counterintuitive profits. I use the profit levels or targets that are much closer to the price, but that give me a higher return as opposed to a higher reward to risk. And in some cases, I'll have bigger targets, but in most cases, I have at least a partial profit, at least a chunk of my trade that I exit earlier than the other chunk. And I'm totally fine taking a 1-to-1 to just get a good trade, have some profits, increase my win rate. And then if the trade doesn't work out after that, that's not my problem. That's totally fine. In this case, a 1-to-1 target would be plenty to even catch the big wick, have a large stop loss to cover the whole wick, but at the same time have enough room for that trade to be in the profit at the end of the move here. This is kind of like an alignment with saying that you don't have to be there to catch the whole move in the market. Most traders want to catch this whole move here. They want to be able to catch from the bottom to the top. And sometimes it's going to work, but most of the time you have a lot of losing trades that way. While if you just focus on these slightly smaller targets, you can make a lot of money. You can kind of take these trades, have a decent stop loss, have a higher win rate, therefore higher return, only because you don't do the same thing that other people do in the market. If you want to see someone doing this really well, check out this interview over here. Interview with Jean-François Boucher, who's a trader, scalper, who only targets about 0.5-to-1 or even less sometimes. His targets are very small, but his win rate is very, very high. So doing this is counterintuitive because most traders are just afraid to do it. It's too low for them. It's too small target. They want to catch that big win, that big trade, and therefore they kind of miss out on all these trades that he catches and gets a lot of profits and has a high win rate on. So check out that interview. It's really good. I will be linked in the corner over here if you want to check it out. Definitely a good one to have a look at to kind of change your perspective on take profits and how to manage your trades better. Now, the second thing I do a lot here, I like to keep my trades longer when the market is in alignment. What I mean by this is very simple. So what we've got in this chart here is a slightly different strategy that I have, a different tweak to my Bollinger Band reversal that I kind of trade on a more trend level. This is much more long-term than my Bollinger Band reversal, where I usually kind of swing trade, but this one is a little bit longer sometimes. So what I do here is quite simple. I'll use a mix of these counterintuitive targets where I'll take some profits at 1-to-1, be out of the trade directly on a quick profit, but I'll keep half the trade on for a much bigger take profit. And I look for an alignment here with the chart. What we've got here is a whole moving average. This moving average is based on basically two colors. It changes from green to red and red to green. When you have a downtrend, of course, it's red. Not fully accurate, but this gives us a good idea of what the market's doing. Now, I have this one on a weekly chart. I've kind of custom coded this one a little bit, tweaked it from what I found on TradingView before, and made my own based on what I want to see. I'm looking for this on the weekly chart, and I'll trade this on lower time frames. So I have a much bigger perspective on what the market's doing on a bigger time frame. I can see here we're trending on a weekly chart, and on the 4-hour chart here we're doing something different. Then I'll look for entries there. So I'll look at these engulfing candles in my chart, and I'll go and take a long. It could be over here, it could be over here. Let's say I take the first trade here. Stop loss would be right there. And now this is a very simple 1-to-1 target as my first position. Okay, this is very quick to achieve. Doesn't take much time. A few hours later, you've kind of locked in your profit. You're done with this, and then you're good to go. Then I'll keep another half of the trade for a much bigger take profit. And as long as we have alignment, as long as we see this moving average being green in that case, the whole moving average, I'll be able to keep the trade open. And that means that I can ride this all the way to when we start to turn red, which is over here, or whenever we go below the whole moving average. This is a much kind of closer to the price moving average compared to these SMAs or even the EMAs. This one tends to follow the price a lot better, so I can ride the whole trend along. And if I was just get out at the worst case here when we go to red over here, that gives me a huge target. Okay, we can go all the way from here to, I'm gonna get like a worst case scenario, all the way to here, which is a 10, almost 11 hour trade in that case. Can you see how big that is? That's pretty amazing. Of course, we missed this part here, but that's kind of normal when we have trending conditions. We cannot just catch the top, it's impossible. We gotta kind of leave it on, ride it longer, but it's still at 10 to 1, which is still pretty amazing. If I was able to get up on price close below this whole moving average again, that would have been even higher. That would have been a 12 to 1, which is pretty amazing in my opinion. So it's a mix of profits early, but also riding the trend when we have alignment. Now, this is different if you were like trying to catch a reversal, like with the Bollinger reversal. I don't want to see alignment here. We don't have alignment because we just try to catch a quick trend, a quick move, quick pullback sometimes, then we're done with it. When I have a trending market, trending condition, I can ride this a lot longer than I would do on a typical Bollinger Band reversal trade. Now, I don't want to be pitching things in this video here too much, but I have a course that's called my Trading Strategy Playbook, where you can learn 9 strategies I use on a daily basis. If you want to check it out, I'll leave a link below. Again, no push here, but check it out if you want to have a look at what I trade, my strategies. I've teamed up with other traders to put this together also, so they can share their own strategies too in the playbook. And it's there to help people learn new strategies and also get my indicators on TradingView to use these and trade them better. So check it out. It's worth it, in my opinion. People have had good results with it, and it makes total sense to grab these strategies. It's pretty cheap also. Okay, now we gotta talk about stop losses here because a lot of people place their stop loss wrong, and then they trail it wrong, which is even double the worst here. Whenever you take a trade, your stop loss should be placed at a point in the market where if price goes there, you're basically wrong on that trade. Okay, as simple as that. Here I've got a very simple bullish engulfing pattern, so a Bollinger Band reversal setup, and I would enter it by taking an entry at the top, pulling my stop loss just below, because I know if price goes there, I'm probably wrong on that trade anyway. Now, I'll give it a few pips as always to kind of be sure, but if price goes here, I'm pretty much wrong in that case. Now, price did go here again after that, so I will be stopped out on this trade. And what did price do? Of course, it rallied in my favor, which sometimes happen. But you get the idea, right? We have a price. If it goes there, sometimes it's going to stop you out by no reason, just because price goes there and because you have a wick. Other times, if I were to go over this trade over here, I'll put my stop loss above the high. I know if price goes there, if price breaks Bollinger Band again, then that short setup here doesn't work. Okay, that setup is invalid. And in this case, price went down a little bit, came back up, stop us out. It's an invalid trade. I can always re-enter later if I want to, but I'm not going to try to kind of move my stop loss higher and try to like wait for the reversal. There's a recipe for blowing up your account. Now, in fact, here on that trade, I had a second re-entry. If I was stopped out here, I can just re-enter right above the high, put my stop loss again below, and then ride this trend over here. See how this works out? Pretty cool. We can always re-enter the market, but we shouldn't move our stop loss against us just because we're afraid to take a loss. Now let's talk a little bit about trading a stop loss here. If I were to go long on this trade over here, entry above the high, stop loss below the low, let's say I'm going to do this one here, I make it a rule for myself to at least reach 1-to-1 before I move my stop loss. And that's only if price is trending and not sideways. What this means is if we're over here and price hasn't reached 1-to-1 yet, I'll wait for price to reach 1-to-1. And that happens right over here. Then I'll ask myself, are we trending here or are we still kind of moving sideways? And I'll say, yeah, we're kind of trending. We have some lower lows we got to be careful about. We might not be able to just move a stop loss right away too close to the price, but we're kind of trending. We kind of have a move to the upside in that case. So that means I can move my stop loss to break even, or if I choose to be a bit more safe, I want to trail my stop loss, in this case, a bullish trade, to the lower lows. If it's a sell trade, it will be the lower highs. So this will be over here, right? So we have a low right here. That is where price has bounced before hitting a 1-to-1 target. That is my new stop loss location. I could put it here, but that's more risky. Just keep that in mind. Now, as price moves in our favor and make new lows, I'll consider moving a stop loss to these new lows over time. Here we have a new low. Price makes this low. Now this is our new one, but we cannot just move a stop loss right here. We gotta wait, right? So we gotta see price make a new low over here, then bounce off and make a new high. Our high was there. Now our high is over here. As soon as we get here, we can move our stop loss to this new low. Okay, continue. Then we see price make again a new low over here. As soon as I see price make a new high, a higher high, which our high was here, price gets there, we'll move our stop loss to here. Now see how we catch a lot of profit that way, but we're not kind of doing it in the wrong way. We're doing it in a very conservative way, where if price goes back to our stop loss, we know we're wrong on this trade. We shouldn't be in that trade anymore. We should just get out and move on. Now price continues to go back here, and boom, we stopped out. Okay. Now see how we've increased our profit here to at least a 1.5 to 1, close to it. Right, that is pretty good. I want to make a quick point here because I believe the reason why people have a lot of issues with managing their trades is they try to catch the top always. And by trying to catch the top, you miss out on the whole move, or you try to kind of be too aggressive with it. Then you have a worse outcome in the end. You got to be willing to leave out some profit. You got to be willing to, in that kind of case, have all this potential profit here, all this thing which is almost double, you take profit. You got to be willing to let that go, because catching the top is nearly impossible. You don't know how long price will go back up. You don't know how long price will return in your favor. You have no idea what the market will do next. And that's why we prefer to just get out and wait for the next trade. In this particular case, we kind of went down and we kind of went all the way to our previous stop loss here, then came back up. But then the key is we can re-enter around this condition. We don't have to wait and be in the trade too long. We don't have to move our stop loss against us. We can just leave it here, take some profit, move away, and then move on to the next trade. Sometimes it's going to suck. Sometimes it's going to be good. Depends on kind of the condition here in the market. Sometimes you can have these 10-hour trades. Sometimes you can have these 1.5-hour trades, even if you want to have a bigger target. But you got to be willing to let your trade run, have your rules in place, and manage your trades accordingly all the time the same. So these are the ways I manage my own trades. If you have a different way you manage your trades, let me know below in the comment section. I want to hear your thoughts and what you believe in and what you do in the market. I'm always curious to hear from other traders how they do things, so I can always improve myself. And you can learn the same thing as well by reading the comment section below. If you want to learn in detail how I trade, check out this video over here to learn my Bollinger Band Universal strategy. And this video here will teach you about my Tokyo session breakout strategy, a more day trading style, different from what I've shown you here today, but a very good strategy overall. Any questions, leave them below. And I'll catch you back here in the next video pretty soon. Ciao.